Bloomberg Audio Studios. Podcasts, radio, news.
Katie, I met your mom yesterday.
Yeah, you did. That's so crazy.
I went to your work baby shower.
Yeah, it was supposed to be a surprise, but...
Yes, you were unsurprised.
I figured it out.
You have methods of
I do.
information.
I do. I love knowing things, so I try to just accumulate knowledge. So I did, unfortunately, spoil the surprise for myself. But they brought in my mom, which was really nice. She met Matt, which was really exciting for her. You keep, circling around Greifeld members who aren't my dad, and my dad is dying to meet you.
Okay.
But
well, maybe I'll meet him at your other baby shower.
Are you actually going?
No, it's too far into New Jersey, and I have too many children.
God, that was a cruel tease.
Yeah, shouldn't have said that.
I know that my mom complimented your voice.
Yes, she did to me.
That's
and I
good.
said to her, the reason this podcast exists is because enough people are like, you have a great voice for a podcast.
Yeah.
And I was like, then I better do a podcast. And now here we are. Years later, doing a podcast.
I know. God, it's such a full circle moment.
Yeah. Anyway.
I'm having a real supply chain day. Where if one
welcome to Oddlots.
if one thing goes wrong, then everything
I see.
everything else goes wrong.
Not like
No, I'm not thinking deeply about
transporting goods through the Strait of Hormuz.
I mean, actually that I should think about a little bit.
What's gone wrong?
Nothing so far. So maybe this is the thing.
Okay.
It's just a lot of events stacked on top of each other.
Likely to go right.
Let's start the thing that's going to derail everything for me. And that's this podcast.
We've really set ourselves up for failure. Hello, and welcome to the Money Stuff Podcast, your weekly podcast where we talk about stuff related to money. I'm Matt Levine, and I write the Money Stuff column for Bloomberg Opinion.
And I'm Katie Greifeld, a reporter for Bloomberg News and an anchor for Bloomberg Television.
Should we just get Elon out of the way?
Yeah, let's
who
Elon
else is
it
getting
up.
Elon out of the way is
potentially a pair of ETFs.
I've been banging this drum for a while that everybody complains about SpaceX joining stock indexes.
Yeah.
A lot. This stuff comes up occasionally, but I've never really seen it to this degree of fervor. People are really, really mad about SpaceX joining the NASDAQ 100 index. They're really mad about the possibility that it might join the S&P.
It's a little bit beautiful. This is the most the general public has ever cared about index methodology.
Yeah, I know, right?
It's nice.
And it's so strange because it's I'm really mad that they changed their rules to allow SpaceX in, which, NASDAQ sort of did and S&P thought about doing and then didn't do.
FTSE Russell also did.
Yeah, FTSE Russell did. People got really emotional about the sanctity of index constitution rules.
What a time.
To me, it seemed this is a giant company, and we're a big index that represents the giant companies in the world. And if the giant company doesn't get into the index because of our rules, maybe we should tweak our rules. I think it's a reasonable thing for the index providers to think, but nobody else thinks that. Everyone thinks it's cheating for Elon Musk to get put into indexes. And so a lot of people are really mad about it. And there was a great Bloomberg article this week about retail investors being mad about it and saying things like, I think he's on the side of evil. There are ways to not have Elon Musk in your stock portfolio, which people do in this article. One of these ways is to switch out of the U.S. stock indexes and into international stock indexes, which seems like a crazy overreaction.
Yeah. You're making a lot of other choices that aren't related to Elon Musk.
Yes. When I wrote about there should be a index fund with no Elon, people were like, oh, what about this small cap index? It's okay, yeah, but that's a different proposition.
Sure. Yeah.
But no, the obvious answer, and the Bloomberg article this week talked about direct indexing. There's a lot of obvious answers, but one of the main ones is buy the NASDAQ 98, buy the NASDAQ 100 without the companies you don't want. And now Subversive ETFs is launching or is filed for the QQNE and SPNE. NE stands for no Elon. The NASDAQ 100 and S&P 500 X Elon.
Yeah.
So basically it's all of the companies in the NASDAQ 100 or the S&P 500, except for those that are run by Elon Musk, which right now is SpaceX and Tesla.
That's the thing. Like for the S&P 500 one, especially, like you're just excluding Tesla.
Yeah.
And Tesla has a 1.75% weighting in the S&P 500. So it feels like, what's the point?
Well, the point is that you are getting mostly the same stocks. You're getting hopefully a comparable performance, but you are not having Elon, which clearly people want. Like that's the thing that people want.
You have the moral
You
high
have whatever
grounds.
you want. Whatever the thing is that makes you like go around calling your broker being like, how can I find an index with no Elon? You have that. And now your broker can be like, oh, here it is.
Yeah.
I don't know. It's just like a market. Like this is not based on like deep analysis of factor exposures. This is based on like people want the thing, so we'll give it to them.
Yeah. I feel like you were about to say marketing, and that is what this is.
Sure.
Yeah.
Everything like, man, how many ETFs have we talked about? Like it's a consumer product.
Yeah.
Right? You want to give people the consumer product they want.
Isabel Lee at Bloomberg wrote this up. She quoted an ETF industry analyst who I chat with a lot. His name is Dave Nadig. And he was one of those people who had a lot of opinions about SpaceX being added into a bunch of these indexes. But he said that they may well attract some money that doesn't think too hard, but these kind of narrowcast micro ideas aren't really for anyone. Fun marketing, not a real investment thesis. So, I mean, this is one of those ETFs.
Why does it have to be a real investment thesis?
Well, I mean, if you think about the long...
It's not a real investment thesis. Like, it's not a like systematic, like based on broad study of the entire stock market. But like some people are like, look, I'm not a stock expert. I want to own the index funds. I'm not going to think about every company that I own. I want to own a passive index thing. But this Elon stuff freaks me out, right? And like that's not an unreasonable. Like these companies traded, very high multiples of sales. Like SpaceX is trading on, plans for space data centers. Like it's not crazy to think. I don't know a lot about stocks, but I think these stocks are overvalued, right? Mm-hmm. Like not investment advice. It's just like that's a thing that people clearly think. Like some people think, oh, I don't like the cut of Elon Musk's jib, but some people think, oh, these stocks are overvalued and it's bad that they've been put into the indexes. So you're selling a real investment thesis to those people.
Yeah.
Or you're selling them their investment thesis.
It's fair. I think the point that
it's fine.
Dave is making, or maybe the point that I want him to be making, is that you think about these like very narrow niche ETFs and they tend to exist for a while, they float along, they trade, they don't gather any money, and then they shut down probably within the next year.
Yeah, sure. I agree, and this might be a very narrow niche ETF, but like, I don't know, like we've been talking about this a lot. Like this thesis is not that narrow, right? Like this thesis is something that a lot of people are worried about.
Yeah. Well, the fun thing is that, I mean, if these launch, we can talk about it in 6 months and see how it's actually done.
I know, but like people don't care. That's
the problem. I mean, you get all these like wild filings and
the Bloomberg article about people trying to avoid Elon. They quote a guy saying, "I would not feel bad about never buying SpaceX, no matter how well it does." Like what I'm saying is, like the thing we'll know in 6 months. I guess we'll know how much money it took in, which is important.
Yes,
but like there'll also be performance, right? Like either SpaceX will or won't outperform the NASDAQ index.
Yeah,
and nobody in this fund will care.
Yeah.
I'm still glad I stayed out of SpaceX.
Yeah. I would also love to check in with that guy specifically, though. If, SpaceX quadruples in value or something, I would imagine that maybe he'll feel a little bit of FOMO. I'm not a SpaceX.
People really don't like Elon.
I know, but people really like money. It's like competing.
But it's 1% of your portfolio.
Yeah. To your point on no one caring. Like, again, as an ETF person, I take that as like you have all these strange little funds out there that have like no assets that just bump around, but they get a lot of coverage because they're interesting.
Yes. Like an ETF is like a form of expression. It's like a way to like package an investment idea. And sometimes those investment ideas are appealing to a lot of investors. But other times they're just funny ideas and so they're fun to talk about, right?
Yeah.
It's just like a little thesis. This is Subversive, which launched these, also runs the Nancy Pelosi copy trading ETF.
Exactly.
Which again, like you have an investment thesis like Nancy Pelosi and other Democratic lawmakers are regularly trading on inside information. They also have a Republican one. They have a Democrat and a Republican ETF. Mm-hmm. You could have a thesis like those guys are trading on inside information, so I want to copy them so I can make money. But like I kind of think that mainly it's performance art, right? Like it's mainly
performance art.
Isn't it kind of fun to have a ETF that copies Nancy Pelosi's trades?
Yeah, I guess the key to not being grumpy about it is to view it in that way. Like it is performance art.
Right. Dave Nadig is an ETF purist who believes that ETFs are a important part of the portfolio and should be constructed in a responsible way. But there's a lot of investment options out there, and this is a fun way to produce funny ones. But this one is not that fun. The Elon one, I really think the thesis is just pretty normal. And we've talked about it in a very straightforward, this should be a product that people offer because people want it.
Yeah. In terms of out there ideas, this isn't that out there.
Totally fine.
It's definitely in the zeitgeist.
I thought I had written, this should exist. But what I had actually written is there should be a no SpaceX Anthropic OpenAI one, which is an overlapping idea, but not the same idea. Mm-hmm. Because people are mad about all of those companies, the rules being changed for all of those companies. But Elon Musk is more personally agitating to people.
Yeah.
Elsewhere in SpaceX.
Elsewhere in SpaceX?
Joining indexes.
Oh, right. No.
Yeah. So
that's a smooth transition.
Is it? Yeah. So SpaceX, as of last week, was not in the NASDAQ 100. So it's timely that this ETF launched this week. Filed this week. It didn't actually launch. Yeah. But so the SpaceX joined the NASDAQ 100 basically Monday evening or Tuesday morning, depending how you count. And it's been it went down that day. It closed down on Monday. Mm-hmm. Despite, tens of millions of shares trading in because all the index funds had to buy it. And this brought some attention to the index rebalancing trade. What also brought attention to the index rebalancing trade is that two portfolio managers at Millennium made $3.7 billion doing it last month.
Yeah. At first I thought year to date, that $3.7 billion. The singular month of June was fantastic for these guys, having the time of their life. And there was a lot happening in June, obviously.
I have talked to people who work at these multi-strategy hedge funds. And one question I've asked is if you're an index rebalance trader, there's some big indexes that rebalance, quarterly, twice a year, whatever. Do these people come to work every day?
Yeah.
Everyone assures me, yes, they work very hard all year round.
I'm sure.
But their job is kind of focused on a couple of big dates. And while apparently they work very hard all year round, they clearly sometimes are doing huge trades and sometimes are not doing any trades because
they're just thinking about
they're thinking very hard.
Yeah.
But in June, there were a lot of rebalancings. One of the things that, the Bloomberg article about this mentioned is there's 5 events. But one of them is the SpaceX joining the NASDAQ and I think the FTSE and a few other things.
I mean, Russell had its annual reconstitution.
Yeah. So there's a lot of stuff going on. And they were deploying a lot of capital and they made a boatload of money. Yeah.
So there was a bunch, this story was so well read and also made the rounds on social media. And as discussed, I bookmarked a lot of tweets about this.
A lot of people were calculating how much the individual people took home, which I would not work anymore if I had done one really good index rebalancing.
God bless. You just got to get one home run. Friend of the pod, Gappy, pointed out that this is very cyclical, a lot of boom and bust. Someone else tweeted out.
Yeah, these same pods lost hundreds of millions of dollars a while back.
Yeah, specifically, there was a story from March of 2025 talking about the uncharacteristic loss that this team lost in February, which was $900 million or something.
Now they've had a more characteristic gain.
So you have to have a strong stomach, it seems to be in the index rebalancing game.
Yeah, strong stomach. So the index rebalancing trade is essentially a liquidity provision trade.
Yes.
Index funds need to buy so much stock all at once. And that's terrible. People sometimes get mad at the index rebalancers because they think that they're front running the index funds because they know the index funds have to buy and so they're buying ahead of the index funds, which is kind of true. But if they didn't do that, the index funds would have to do all of their buying at the close on the one day, and they would have to pay up so much, the stock would spike up at the close as there was tens of millions of shares of new orders from index funds and nobody to sell it to them. Mm-hmm. So what the rebalancing traders are doing is they're selling it to them, right? They're saying, okay, we know that, at the close on Monday, the index funds are going to have to buy 60 million shares of SpaceX or whatever it is. So we're going to buy some stock so we can sell them 60 million shares at the close. So this stock doesn't spike up at the close on the rebalance day. And so it's probably helpful to index funds. And there are studies showing that index funds have less slippage basically because of the existence of this trade. they get a fee for it in expectation.
Yeah.
They get an at-risk fee for it. I talk to hedge fund managers sometimes who are like, if we didn't do this, like indexing wouldn't work. Like the rise of indexing is made possible by multi-strategy hedge funds doing this trade. Mm-hmm. My assumption is that if the hedge funds just didn't do this trade anymore, like you could solve the problem with like averaging periods. Instead of the index provider saying, as of Monday, this is entirely in the S&P, you could be like, we're going to average it in over 30 days. So the index will slowly adjust over time so that the index funds could buy over time rather than buying on one day. But right now the index funds buy on one day and they buy from hedge funds.
Yeah.
And so the hedge funds make money by anticipating index fund demand and by also the main thing you have to figure out. One thing you have to figure out is what companies will be added to the index, which I think is like.
That sounds like the fun part.
Yeah, I think like some of it is kind of mechanical. Like some of these indexes is not that mechanical, but another thing you have to figure out is like how much stock the index funds will buy, which is like, fairly mechanical because you can kind of guess how much index funds own and then they own that percentage. But another thing you have to figure out is how much your, competitors will sell, right? Like you have to know who else is doing this trade because if twice as many people as you think are doing this trade, then you're not going to you're going to drive down the stock in the closing auction. But so yeah, it's like a trade with some risk. But the other risk is just like, we own a couple of stocks, the stocks that you think will be added to the index. And like, if you are just, so you're just like long a lot of idiosyncratic risk on like huge positions in those stocks. And so that's how you can lose money is if those stocks go down. It's also how you can make money. Like one theory that a reader sent me about the $3.7 billion they made in the rebalancing trade last month is that two stocks were added, I think, to the S&P. One of them was Marvel.
Yeah, that sounds right.
Marvel, it was announced they were being added on June 5th, but you could probably have guessed. So like probably some of these funds were long Marvel before June started.
Yeah.
And on June 2nd, Jensen Huang gave a talk where he said that Marvel was going to be $1 trillion company and the stock went up like 33% that day, adding $70 billion of market cap. Like that could be the whole explanation for this, right? Like you're just idiosyncratically long a lot of Marvel and then a Marvel goes up and then you've made $3 billion. So that could be the whole story.
Yeah. Well, I was thinking it sounds fun to be an index rebalancer because outside of like the Marvel Jensen Huang situation, even if it is somewhat mechanical, determining which stocks are going to be added, you still see big pops in those names after it's announced that they're going to add the index.
Yeah. Right. So, I mean, that's right. That's the trade is like, he's like buying it before it's announced so that you get that pop.
Yeah. Sounds fun. Something that I wanted to ask you about, and maybe this is a dumb question. So you talk about how when it comes to index funds needing to get these shares at the closing auction, they used to work with investment banks. Now it's these hedge funds that have sort of stepped into that role. You also point out that these hedge funds don't have customers or take orders. So how do they actually link up with the index funds?
It's an auction.
It's just an auction.
This is just a NASDAQ closing auction.
They don't know in advance, the index funds? That
I don't know if there's any sort of like block trade desks doing stuff, but
makes me nervous.
78 million shares of SpaceX cleared in the closing auction on Monday, which is like 10x what it usually does. So like index funds have to buy at the closing price, right?
Yeah.
And they don't have to, but to track the index, they have to own it at the closing price. And so they put in big orders to buy at the close, and someone has to be on the other side of those orders. And it's hedge funds knowing that there will be demand in the closing auction.
So what do you think?
It's just a market.
What do you think happened this past week that you actually saw SpaceX shares finish the day lower? Did someone miscalculate what the closing price was going to be or how many shares would be needed?
The way to make money on the index rebalancing trade is to buy low in the days leading up to the rebalancing event.
Right.
And then sell in the rebalancing and then keep buying low. Conceptually, you should sort of buy like half of the shares before the rebalance event and half the shares after the rebalance event. And like what should happen is that like you'll buy at kind of low prices and it'll kind of spike up into the close because like there'll be a lot of, like you'll be going like buying and then like index funds will buy a ton and it'll spike up and then you'll keep buying. Like you'll short some shares to the index funds in the closing auction on the one day, and then you'll cover your short over the next few days, right? And that's like kind of what's happened, right? Like the index funds had to buy in the auction, and then like their buying demand was done, and then like the hedge funds have the opportunity to keep buying to close out their shorts if they were short. I don't know, but like that's what like conceptually you should buy half before and half after. because you're sort of averaging them in. And like, you don't have to average them in over the period leading up to the rebalance date. You can average them in over the period around the rebalancing date.
These are good notes for my next career as an index rebalancer because I love.
You should. I'm not an index rebalancer, and I'm sure that people who actually do it are horrified by my naivete.
But hopefully they're listening and they're going to write in.
But yeah, no, I mean, like the answer is there was a big spike of demand in the auction, and now the stock is lower because that big spike of demand went away. And hopefully, if you're an index rebalancer, you're profiting from that by selling in the closing auction on Monday at like 160 or whatever, and then buying today at like 150.
It is going to be interesting also to, as you point out, we have the start of the lockups expiring this month.
This is like I think I've said this on this podcast, like what you want for like neatness is the lockups all expire on the same day it's added to the S&P 500, right? Like you want to just like, there's huge natural supply, there's huge natural demand. Sure, hedge funds can intermediate that, but like, why not just, have an auction where the lockup sellers sell to the index buyers? In
a perfect world, that would be the case.
No one does that because it's like, I don't know. You can't like you can't count on S&P to include you at a particular time, but it's so convenient.
Yeah. I just feel like SpaceX is such like an interesting little petri dish of, okay, you have this index demand. Okay, it was one time. Now you have like this waterfall.
Right. Like why not match those up?
I know, but what's going to happen? Because we're not.
Yeah. I don't know. I mean, like, I don't know. Like
you have some analysts saying it's going to $10 trillion in market cap. It's just.
I mean, like in general, the people with the lockups are people who are not the anti-Elon Musk people. They're the opposite of that, right? So like a lot of them won't sell. Some of them, a lot of them will sell, right? Like a lot of them made a lot of money and, we'll take some profits. But some of them are like, no, I'm in this forever.
They're
in this till 10 trillion.
They're true believers, man.
Yeah, I don't know. I mean, but I'm sure that the lockup will, create a lot of supply. I mean, definitely one theory is that the stock price is high because there is just not a lot of supply and there's a lot of forced demand from index funds and a lot of demand from retail. And if instead of 5% of the stock being available to buy, 40% of the stock was available to buy, it would be lower. But depends on people are actually selling.
We'll just have to watch this space.
You'll be gone.
I will be watching fondly from afar, very distantly.
Should we talk about eggs?
Yes. We should have started with eggs. It was a risky bet to start with ETFs because I feel like we lost a lot of the audience.
I know. Should we switch them around in post?
Yeah. I don't care.
You don't care. It started with Elon. People love the amount of Elon.
That's true. Eggs appeal to everyone. Yeah. Yes, they're a great source of protein and choline, which is very important for brain health.
Okay.
Only if you eat the yolks. Eggs are super expensive. Yeah, I love eggs.
They were super expensive because of bird flu and market manipulation.
As it has since been revealed.
Maybe. I'm not totally convinced that the market manipulation actually raised the price of eggs that much, but the Justice Department is, and many state attorneys general.
That's my least favorite plural, attorneys general.
I know, people get really into weird plurals. Anyway, the Justice Department in several states sued a bunch of egg producers for manipulating the price of eggs. And they settled last week for eggs.
I love how you basically ask, like, why wouldn't you be rigging your version of LIBOR if you were in this game?
So it's not, I feel bad calling it LIBOR because like LIBOR was essentially a number that was self-reported. Like a standard setter would call banks and say, hey, what price are you borrowing at? And they just make up a number. What I've been calling egg LIBOR, which is actually the Urner-Barry index price. Yeah, it's now called Expana, but like there's a market data service called Expana. It used to be called Urner-Barry that like reports the price of eggs. And it reports the price of eggs based on transactions on the egg clearinghouse. But the egg clearinghouse is not where most egg transactions take place. So like you have the egg clearinghouse basically for egg producers to trade surplus eggs. So sometimes an egg producer owes its customers more eggs than it has. Sometimes an egg producer has extra eggs. And so they like match off in the egg clearinghouse and that produces a price. But there are not that many transactions on the egg clearinghouse compared to just wholesale egg transactions.
Right.
And so the egg producers are like, well, I mean, allegedly, settled lawsuit, but the egg producers are like, well, if the price on the egg clearinghouse is high, that'll make the price on all of our contracts high, so we can overpay in the clearinghouse market to raise the price on all of our wholesale contracts that price by reference to the Urner Barry price. And so allegedly they did that, and they have like, emails and communications being like, hey, let's push up the price really high. And they did some spoofing. They would put high bids onto the clearinghouse so that the pricing service would use those high bids, and then they take them away before they got hit. And the price of eggs allegedly went up. Again, the egg producers are like, it didn't really affect the price of eggs, but the Justice Department thinks it did. And so they sued and they settled with a bunch of egg producers. And truly my favorite part of the story is that the settlement was paid in eggs.
Yeah.
You never see that. You never see that.
No.
But the egg companies are like, okay, we're going to pay 50 million eggs for this market manipulation.
Those food banks are going to have to take physical delivery of so many eggs.
Yeah, they're going to food banks.
Which is beautiful.
The New York press release was a little ambiguous. It was like, the New York Attorney General has secured 50 million eggs, and 5 million of those eggs will go to New York food banks. The actual explanation is that the other 45 million will go to food banks in other states because it's the total settlement is 50 million eggs or whatever. But I had a moment of thinking will the New York Attorney General eat 45 million eggs?
I mean, don't threaten me with a good time. I love eggs. But I also loved some of the emails that were found. Hickman's, for example, was, conspiring with executives from other egg producers, and at one point emailed, hurry, there are only 16 bids on ECI right now, that's the egg clearinghouse, and 15 of them are ours, meaning Hickman's, which that's I don't know, that's a bad email to send. Even if they didn't really meaningfully manipulate the price, that's a hard one.
Yeah. More than one person said, we have to bid like they vote in Texas early and often, which is once is fine, but using that joke repeatedly. I'm
glad you immediately brought up bird flu, because that was my knee-jerk reaction reading this. You think about the time period that we're talking about, 2022, bird flu, avian flu was devastating the nation's flocks. Chickens were dying left and right. They were having to be culled en masse. They didn't need to do all of this.
Yeah. I mean, I think that obviously their costs went up, right?
Yeah.
Flu, right. So one possibility is they used bird flu as cover for market manipulation. That's clearly kind of the vibe of the Justice Department complaint, which is they saw prices going up anyway. They figured any price increase that they tried would be, everyone would be it's bird flu, it's fine. And so they tried to push up the price a little bit extra to make extra profits. The other possibility is that their costs went up because of bird flu, and the market pricing service was slow to react to that. And so they manipulated the price in the clearinghouse to reflect the actual price of eggs. They say everything we did was legitimate and it didn't push up the price. So I don't know, you can imagine a sympathetic explanation for this. But in any case, the price went up mostly because of bird flu, and then a little bit maybe because of market manipulation around the edges.
Yeah.
The other thing that I like is that right around when this is happening, I think 2 weeks after the conspiracy allegedly ended in 2025, Cal-Maine, which is one of the big egg producers, their controlling family sold $300 million worth of stock. In
the Adams family, actually.
In an underwritten offering. And so they put out a prospectus disclosing all of their risk factors. And one of the risk factors is prices are temporarily high because of bird flu. And by the way, we got an investigative letter from the Justice Department trying to figure out why prices are high.
Don't worry about that, though.
Yeah. I wrote on Thursday, that feels like an everything-is-securities-fraud lawsuit waiting to happen, right? You bought shares, basically near the all-time high. You bought shares from the controlling family without knowing that they were about to settle a market manipulation case. That's not ideal.
No. Yeah, there's a lot of family drama involved in that. Maybe it's not drama, but the Adams family does control it through super voting Class A shares held by a vehicle called Daughters, which is 4 of the daughters of the late founder. I don't know. I just love the idea of there's this egg dynasty.
Sure.
Yeah.
I think there's a number of egg dynasties.
I would imagine so. I wonder how many markets this sort of behavior is happening in. I wonder if it's happening in cattle right now.
I talked about there was a chicken LIBOR conspiracy a while back. Yeah.
Yeah.
I think there's a lot of it.
Well, in cattle, I don't know if you've been following screwworm.
I'm moderately up to speed on screwworm.
Ravaging,
yeah.
The nation's herds.
Yeah.
So, I don't know. Beef prices are going up.
I wonder.
All those worms. Bad news. Something else I'll be monitoring over the next 6 months. It's a situation I'll keep an eye on.
Money Stuff Podcast. I'm Matt Levine.
And I'm Katie Greifeld.
You can find my work by subscribing to the Money Stuff newsletter on Bloomberg.com.
And you can find me on Bloomberg TV every day on The Close between 3 and 5 p.m. Eastern.
We'd love to hear from you. You can send an email to moneypod@bloomberg.net. Ask us a question, and we might answer it on the air.
You can also subscribe to our show wherever you're listening right now and leave us a review. It helps more people find the show.
The Money Stuff Podcast is produced by Anna Mazarakis, Moses Andam, and Alexis Hott.
Our theme music was composed by Blake Maples.
Amy Keene is our executive producer. Thanks for listening to the Money Stuff Podcast. We'll be back next week with more stuff.